Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 5 o'clock in New York. It is Monday, October the 1st, 2018, and this is the Daily Report for Gold and Silver. A strong U.S. dollar, favorable U.S. equities markets, along with a trade deal between the United States, Canada, and Mexico have continued to put some pretty moderate pressure on gold pricing. Gold closing lower by about $3.70 today, with December futures fixed at $11.9250. Of course, we'll talk about that because we do have an active trade in gold when we pull up our technical studies. Silver also trading lower, but really getting hit pretty hard, down 1 1/3%, a net decline of about 20 cents, with silver currently trading at $14.51. Palladium also lower on the day, and that gave up about 2 1/4%, a $24 decline, 10.48. But palladium has been so strong recently, it is not surprising that some profits were pulled in the marketplace today. And finally, the only precious metal bucking the trend by $3 to the upside has been platinum, which is currently fixed at $825.40. Now, providing some strong headwinds for the precious metals complex was a stronger U.S. dollar, which gained almost 19 points, 0.2%, and is just shy of 95 at 94.92. And when we look at U.S. equities, we had a very, very impressive climb today, with the Dow Jones Industrial Average gaining about 192 points, closing near the record high at 26,651. S&P gaining about 1/3% at 2924.59. And the only index kind of bucking the trend was the NASDAQ Composite, closing fractionally lower at 8035. Traders, as I spoke about in our opening letter today, it has really been a combination of dollar strength, rising interest rates, and a risk-on market sentiment in U.S. equities that has provided downside momentum in the precious metals markets long term, when we consider the fact that gold has lost roughly $177 from the yearly high that we had this year, when gold traded as high as $13.69, to current pricing fixed at $11.9260. In terms of today's move, we saw gold decline by about $3.60. And the other thing that we can see without any question is the fact that we have seen this defined downtrend in gold since the middle of September, and that is when gold hit roughly $1,218, the resistance area, for the third time in a row, this time unable to take it out again and then slipping to lower pricing. We are short December gold at $11.9940. We put that position on the 4th day of September, and really we have been witnessing the market trade as high as about $12.18 before finding some resistance. We have seen it really trading as low as $1,200 to fractionally lower than that until the price declines last week. This came in immediately following the statement from the FOMC meeting and the announcement that they were raising interest rates. Our target remains effectively at $11.78. That's the 0.78% retracement, and our stop was lowered last week to $12.02 and change. My recommendation is to maintain our current short position and to maintain our current stop. And traders, although gold pricing lost about 1/3% in value today, it was silver that got hammered, and hammered hard, trading off by about 20 cents, a net decline of 1 1/3%. That's pretty sizable for a day, currently fixed at $14.52. We're looking at a weekly candlestick chart, but even on the weekly, you can see that it was a pretty substantial decline. And what we are seeing is a resistance level that was not able to be overtaken today, and that's the 0.23% retracement, which means that if we see further erosion in silver, we could easily see the market go back and test these lows that came in at the end of 2015. And considering that silver made such a dynamic move on Friday, gaining 40 cents, that's indicated by this large green candle here, we saw a decline of about half of those gains come into the market today. I do believe that we will see a further erosion in prices in silver. And as I said, we could see it go back and test these lows first at 14. If 14 holds, that would be a good logical support level. If it cannot hold and we see dramatic declines, we could see the market go as low as 13.50. An extremely interesting day in the precious metals markets. We are looking at a daily palladium chart. Palladium got hit the hardest of all the precious metals today, losing about 2 1/3%. We can see that on this daily candlestick chart. I do believe, however, that we want to see how it reacts in this particular area because we have a strong level of technical support that comes in at around 1,046.50. It is based on our Fibonacci retracement. We also see some recent highs that have come into the market. One, exactly to this price point. That occurred, of course, in April when gold and silver were also at their yearly high. And then before that, in March, when we tested and moved a little bit above that. My sense is that if this particular area holds right now at 1,046, the next real level we'd want to see it make a play for is about 1060. That's this top, with the major resistance coming in at 1135, and that is based upon the tops that came in just at the beginning of this year when palladium traded as high as $1,135. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.